And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures trading family. Good morning. It's time for the market forecast for Monday, December the 5th. As always, thanks for trusting me with your time. My name is John Hoagland. Our focus is always on finding accurate context, good risk management, and remaining patient in our trading. This week, we have very few economic numbers and no talking Feds. They won't be speaking until after the FOMC meeting, which is next Wednesday's release. This morning at 8:45, we're looking for the PMI composite final, 9 o'clock, factory orders and ISM services index. Just to kind of look at what's going on this week, tomorrow we have the trade balance numbers, and that's it. Could be somewhat impactful. Wednesday, mortgage applications and mortgage rates, productivity and costs, neither of those expected to be very impactful. Of course, the EIA petroleum status report 9:30 on Wednesday will be impactful, I'm sure, for crude traders. Thursday, the usuals, jobless claims, natural gas due out. We do have some bill announcements and auctions throughout the day on Thursday. And then Friday, the probably most important number of the week, the PPI final demand numbers. We also have the Michigan State Consumer Sentiment due on Friday. So we're going to be largely in our own heads this week as far as looking for opportunities. This morning, U.S. stocks are set to open lower as traders and investors are, again, left with little known data or economic releases in our own minds to deal with. Friday's PPI number, again, probably the most important release of the week. OPEC Plus has agreed to maintain current oil outputs while Russia mulls response to the price cap that Europe is trying to put on, and will cut production if required. So keep your ears and eyes open for that. The VIX this morning up a little bit here, up about 5%, still at a very low number, just around 20. The dollar index 104.23, down slightly. And the yield on the 10-year holding relatively steady at 3.5%, up just a little bit from the close on Friday. As always, if you like what you see, hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the market forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. I'm looking forward to, again, another interesting and challenging trading week this week. Gonna try and kind of remember that we don't have a lot of information. When there's no good news, no bad news coming out, I keep thinking about what I always say about the equities. With no bad news, the equities just have a tendency to grind higher. Now we've got, the NASDAQ in a little bit of a different situation. We're gonna see all this here. Where did my NASDAQ daily go? There it is. We're gonna see all this in the charts here very shortly. Again, if you do like what you see, hit the lucky like button. If there's something we're missing, something we can do better on anything, text me, email me, jhoagland, JHOAGLAND, @topstep.com with your thoughts, ideas, questions, and feedback. Good morning, everybody. We have Dark Kevin, first one in the room, winning the prize this morning. Shaw Cunningham, good morning, Spencer. Fred Decker, hello, sports fans. Nas Tick, Scott Saw. I figured there would be some trolling about the football game yesterday. Yes, even an inferior team can beat a superior team from time to time. At least they have to live in Green Bay. Good morning, Theo Nastic. Yeah, I thought the Bears were going to get them too this time. Unfortunately, they were unable to. Apparently, somebody on a bicycle is trying to get past me. But it was a heck of a good game for the better part of it. I thought Bears had a pretty good chance at it. They gave it away with a couple of turnovers, but our young Mr. Fields is moving along very well. So I want you to remember, I'm taking note when the Bears take over and they're doing well and Green Bay is not doing well. I'm not going to allow any fair weather fans. Good morning, Theo Nastic again. Caesar. Serenity Trader, good morning, Terry King, Jules, JM, Rob T, good morning, Sonny, good morning to my trader family. Here's a quote for the day from Sonny. Thank you, Sonny. It always seems impossible until it's done. Nelson Mandela. I can't, maybe I can, I'm going to try. I'm doing okay. I'm doing better, and now I've succeeded. Tom, there's another Green Bay Packer fan there. My little brother, love you, buddy. Steven, Danny Ireland. We had a nice little text chain of smack talk going on yesterday. Thought I was gonna get him. Steven, good morning, Danny, the Rooster. Rogers Field. I was thinking yesterday when the Bears were ahead, they're gonna call Soldier Fields Field. No, I don't think they'll ever call it Rogers Field. Jason Lewis, good morning. John France, Vince, good morning. Adrian, Dan Trader, Adrian again, JD, Charles March, George Duque, good morning. Rusty Golfer, my spirit animal. I love the rivalry even as a Bears fan, Fred. Yeah, it's funny, isn't it? It's okay. Haggle Matters, Orion, good morning. Sarah Hall, prayers and love to you as well. George, Lacey is all curled up in her bed. She was outside. She's had breakfast already. I haven't even had breakfast already. The dog's already down for her first nap. Dimitar, Jordan, Alejandro, Jay, Rusty Golfer. How about them Cowboys, right? Ricardo, Lions fan here. Good. Yep, we got to talk a little bit trash now and again, huh? Yeah, the Bears, I think they're going to be looking good as long as they don't trade off their quarterback. He did have a couple of interceptions yesterday, but he's looking sharper and sharper. And right about the time Rodgers is ready to retire. Terry King, Ray, good morning. It's good to see you. Serenity Trader, discipline earns what money can't buy. Jared Tendler, yeah, I saw that. It was on, I think he tweeted that out over the weekend. Discipline earns what money can't buy. It's a great quote. All right, what do we have today? We have Make Hogue Money at the end of the day today. We also have group coaching. Group coaching is at 12:30. Make Hogue Money at 2 o'clock. Looking forward to seeing as many of you there that would like to join. Always a pleasure to have you there and to see what we can find. Again, if you have specific questions for group coaching, email them to me. Jay Hoagland, J-O-A-G, I gotta spell my name. JHOAGLAND at Topstep. Email the questions there. You let me a chance to get prepared for them. And other than that, we'll just take them on the fly. And then Make Hogue Money at the end of the day. Tomorrow's Make Hogue Money is right after the market forecast. And I've got a special guest coming for a special Make Hogue Money next week. On Tuesday at 9:30, we're going to have a special Make Hogue Money with Anne-Marie Band, one of our fan favorites, and we're going to have the opportunity to talk to Anne-Marie. Maybe we can even get her to answer a few questions that we've all been having. Joe D, if you're here, you should be excited about that. And that's, again, next Tuesday, 9:30. Next Tuesday, 9:30. Make Hogue Money, a special session with Anne Marie Band. So look forward to that. All right. What are we looking at here? We're going to be looking at... Yes, it is a great book. I've been through it once, and there's a lot of continuing education that you can do right in that book, homework that you can do. It's a really good book. All right, let's take a look now in the S&Ps. So, it's Monday. I tend to try and take things kind of slow. What I'm looking at here is we're considering off the low here, medium time frame structure, and it remains intact to the upside. Remember, we have very little economic data this week. When investors and traders are left to their own devices, they tend to work from the buy side. Now, I don't know what's going to happen by the end of the week. We don't know about any unknown events that might happen. But if left to our own devices, there is a tendency for the equities to continue to roll higher. The S&Ps are already in that structure. We've got plenty of space to pull back before we may find some really good support, but I'm just keeping that in mind. With no bad news, or even sometimes good news knocks the market around these days, what are we going to do? Are we starting to form a bull flag? Overnight inventory is short and getting shorter. What are we looking at here on the longer time frame? Here's the continuation chart. Look at where the 200 session moving average is. It's below price. Good morning, Joe. I don't know if you were late. I just told everybody that on Tuesday next week we're going to have a special session at 9:30 Central of Make Hogue Money with special guest Anne Marie Band. So look at where the 200 session moving average since, well, back here in March. Every time we've gotten near it or gotten to it, whoops. Oh, I just did it again. Dang it. We've found resistance even as far back as the 2 weeks ago, 3 weeks ago, maybe even into last week we found resistance. We've broken out above it, and now we're holding above it. The other thing that I want to say is we've got our all-time high relative contact. Last week, we had relative contact to that trend line. So that's going to be a line in the sand for us, I believe. So the 200 session moving average is coming in at 45. No. That's not correct. Here. 40.3480. 40.3480. Keep that in mind if we get down to that level at some point in the coming days. See if that may provide a degree of support. But now back to the 30-minute chart. Okay, couple other things. Aside from last Thursday, this big up move here where we had delta congruent with direction. I mean, we had 40,000 positive delta. This was multiple time frames acting in concert, pushing price higher. But we also have to know that we had delta opposite direction for the better part of this trading session on this day, on this day, on this day, and on this day. Let's take a look. Okay, this is a different platform that gives me regular trading hour delta. Negative 8,400, negative 7,700. Okay, well, overall, price is attempting to move higher. Look at where we opened on Friday. Direction throughout the day was to the upside, and delta was negative. We lost 1,000 in open interest, so there's not the implication that we had a lot of longer time frame traders accumulating longs. It doesn't mean that it didn't happen because we only get to see so much of the information. Here we had higher value, negative delta. There's that bicycle trying to get past me again. Negative delta, that seems somewhat congruent, this also. But the market is attempting to go higher on negative delta, and it seems to be all doing relatively well at it. So to me, that's kind of telling us there is a bit of a divergence. Look at how deep the divergence has gotten since we started this move to the upside. We've got more aggressive sellers over the last 2 months than we have aggressive buyers. Or is that really the case? We've got negative 110,000 delta since we put in the low here. That is longer time frame buyers accumulating positions as the market goes up, getting short time frame traders too short, and that's when we see some of these big up moves, assisted, of course, by economic information. What do I think of the poor low on Wednesday from the S&Ps? Boom, right there. I think it's going to be important when it becomes important. Yeah, that was T4, Mike. I think it becomes important when it becomes important. This was balance. Obviously, something changed on Wednesday. We left the balance, went to imbalance. Now we are in balance. I know it's hard to say, hard to hear imbalance and in balance. We are in balance now after leaving previous balance with lack of balance. I should probably use that. So that does loom down below there, and it might be something magnetic if the market does continue to push to the downside. Let's take a look at crude oil now. Just opening weekly kickoff high 41.38, low 39.54. 39, let's see here. I'm sorry, 82.70 weekly kickoff high, 78.30 weekly kickoff low. Those were the S&P levels, by the way. Look at our overnight high. I think we just really kind of got to it. 82.72. 2 ticks above weekly kickoff high. Range bound, I've got the weekly kickoff levels relatively tight because I think that there may be some changes or information in crude oil. Right now, our weekly kickoff high is acting as resistance. We lost 9,300 on Friday in crude oil. I think there was a little bit of long liquidation, some profit taking, some worries about the OPEC meeting, which has now stated that they're going to hold pat. They're going to keep outputs the same. However, Russia is now threatening cuts. Short time frame. Upside still intact. Here's the 30-minute chart. Overnight inventory, where do we start? Down here. We're holding overnight inventory up against resistance. Looks like we've just closed the gap. I would venture to say that our opening range is the high of the session. That is true right now. It is also the low of the session. We have not left the opening range here just yet, so that does provide a little bit of an opportunity for us. We may come back and see how this opening range played out. Looks like it did open with a gap, but has now since closed that gap and up against resistance level. This whole zone up here might be a little bit sticky for us to get through on an upside move. NASDAQ. All right, so 1 second. Okay. Much bigger upside challenge. The market has been attempting to move higher, but it has been relatively unsuccessful. You can see on this on this daily chart, the 200 session moving average is coming across where we attempted to continue last week. We were unable to. Take a look at the continuation chart, however. There's the 200 session moving average on the continuation chart. We've got a lot more work to do. We've got 2 really decent points of contact on this same trend line, maybe 3 on this same trend line in the S&Ps, but the S&Ps is a lot closer, and it is holding above the 200 session moving average, which might be a positive. Good morning, my brother Rick. Love you. So, we had a drop in open interest, 5,700 on Friday. I don't know if that's correct because the S&P is only lost about 1,000 in open interest. That seems a lot for the NASDAQ, right? Maybe we got a little bit too short in the hole down here on this move to the downside, and we had to wrestle all that inventory back. Are we putting up a bull flag? I've got this trend line up here across the top with 1, 2, 3 points of contact that may represent opportunity if we break out above it or if we continue to fail below it. Overall, I think we've got a little bit of overnight short inventory. We're opening in range and in value. That offers me the comfort and ability to remain patient and look for better trade locations as the day goes on. Be watching to see this trend line here to see if we can find some acceptance above it if buyers come in after the regular trading hour open. We got a few overnight shorts in the NASDAQ. I think we've got a few overnight shorts also in the S&Ps. That's the wrong one. Overnight shorts. So we don't have any real important economic information. Are we going to fall into some shorter time frame control here? It seems like that might be the case. We could put our trend line across the top here in the S&Ps too. I'm not going to bother with that right now. Take a look at gold. Gold lost 7,000 in open interest on Friday. Which direction did that open interest come out of? You can't forget, a lot of that is going to be rollover related. We lost 69. Yeah, we lost about 7,000 in the front month, in the February month. So what direction was that? Was that short covering? Was that long liquidation? I think we're going to have to look at the 30-minute chart to find out. We also have the 200 session moving average in play. Again, on the continuation chart, which is where, there it is. We're above it. We're above it on the front month as well. Here's the front month. We just had it. There it is. Not really above it on the December contract, but the continuation we are above to the 200 session moving average. Take a look at the 30. So overnight, or excuse me. It looks like that was some long liquidation on the number that came out at 7:30, but the rest of the day we started buying it back up. So I'm going with short covering as it was the bulk of the day going in that direction. Probably a little of both. Do we have any overnight inventory here? No, not really. We opened here, we're holding here, we looked higher. Maybe a little bit short as far as overnight inventory is concerned, but we are in range above value. We've been delta divergent in gold as well as the S&Ps for the last couple of sessions. We can see it right here where the market opens, looks lower, and then recovers by the end of the day with lots of selling against the direction. That tells us that there may be longer time frame buyers here. We have the same situation here. We have short covering here against Delta. We have more aggressive traders using market orders to enter the market, but price is going in the opposite direction. So these 2 days indicate possible longer time frame buyers in the marketplace. Lacey is snoring away over there. She works really hard. She's got a hard life. Upside structure remains in the euro, of course. So we know that if we're going to be trading gold with the euro, one of the key things that we're going to be looking at is going to be the U.S. dollar, and the U.S. dollar is a little bit lower this morning. So, of course, the euro is going to be a little bit higher this morning. Short covering Friday, we lost about 4,700, and we actually ended up closing higher on the day. I don't know where we got all these shorts from, but it is the indication. Here's the 30-minute chart. Yeah, we got too short. And we recovered. Kind of hard to read open interest in this type of situation. Look at the delta here. Closing at the high of the day against more aggressive sellers. Are we continuing to see longer time frame buyers in these markets? I'm sorry, hang on a second here. Opening with a gap, closing, remaining in the gap. If we can't close this gap relatively early, the rule states we're going to be looking for opportunities to go in the direction of the gap, which would have us looking for potential longs. Again, keep your eyes on the dollar. Keep your eyes on the dollar. Even if you've got a delayed quote, keep your eyes on it. 10-year. So I have a feeling that because of the FOMC meeting next week, this market is going to fall into an early winter nap. Last week's high, weekly kickoff high, was 114 and 30 seconds. Our overnight high is exactly at that level. So it appears that our last week's weekly kickoff level is having some effect on the marketplace. We're seeing the yield on the 10-year up slightly from the close on Friday. We added 15,000 in open interest on Friday. A little bit lower volume. What direction? So everybody had that big dive on Friday and then recovered it, right? So thinking, there was a combination of long liquidation and short covering throughout those sessions, creating the lower open interest. Where are we now? Well, we are not really holding much as far as overnight inventory is concerned, maybe a little bit to the short side. Inside regular trading hour range, yes. Inside value, no. But we've got kind of an expanding range yet on Friday. I'm looking for a contracting range today. I think this market is, without something happening, with no Fedspeak, with very little economic information due out, I think this market is destined to go west to east for a little while. As my brother calls it, barcoding. And for the natural gas, well, we've got a little gap to the downside here, don't we? A nice weekend gap below weekly kickoff low. Our next weekly kickoff level would be down here at 40.70. We've got a gap. We cannot forget gap rules. If we can't close the gap relatively early, we look for continuation in the direction of the gap. We do have this swing low back here from the 24th of October, which is 564 in play. That might be a little bit of a bump for us to get down through. Here's the 30-minute chart. We started here. Are we starting to show a little bit overnight inventory? Yes, to the short side. to the short side. We've got the weekend gap. This is the same as a regular gap. These regular trading hours to regular trading hours is what we're looking for, and that's a pretty substantial gap. We did trade to this naked point of control here on Friday, so I'm going to shorten that up right about there. And got a couple of naked points of control down below, but these are left from the previous month, the December month, so they're a little bit off, but I just keep them on there so we know that there's some naked points of control down below that we may be able to achieve. And what traders are looking at, they are going to bring price to. So we got gap rules. We're a little short in inventory. My question is, now what? Now what do we do? I'm a little bit cautious to get involved. What I'd really like to see from a trader position is for us to range here and then for us to open higher, leave an island bottom here. I don't want expensive natural gas, of course. Nobody does. But from a trader standpoint, that gives us reference to look for better opportunities. I'm a little bit cautious down here today, of course. And I don't really trade the natural gas anyway, just talking about looking at the natural gas and the way I look at every market as an auction process that occurs in infinite time frames. It's very difficult to kind of wrap your head around that. And working on some content that I hope is going to help with that. So I'm looking forward to that. All right. So we are in good shape. I'm going to remind everybody we do have group coaching today. We have Make Hogue Money and the recap after that. Take your deep breath with me. Stay humble, grateful, creative, and centered in your trading today. You feel yourself getting out of center, feeling venom in your veins, feeling angry, feeling emotional. Your decision-making process is compromised. Take a step away till you get yourself back to center and then re-engage in the markets. We don't want anybody blowing up. It is your success that we are seriously looking forward to. So get out there and profit today. Don't forget about the events today. Don't forget about the special Make Hogue Money next Tuesday with Anne Marie. That's going to be a lot of fun and very informative. And I'm looking very much forward to having her with us, and looking forward to seeing you there as well. Get out there and profit, trade well. We'll see you in the proverbial trading pit in about 5 minutes here. Trade well, and I'll see you later. Have a great morning.